Good morning, traders. It's May 1st, 2023. This is a look into our trading week that's up ahead of us. FOMC coming out on Wednesday, as well as our investment performance results from our live trading room from last week. Okay, let's jump right into it. Brand new month and a lot of the same going on. We pull back a little bit as we start the week and we look at the weekly technical analyses with the matrix. We call it the matrix, has 12 different technical indicators mixed in with some moving averages, and it gives us some pivot points, some Fibonacci levels, and we're in a buy mode. We have been in a buy mode for a while now. And that buy mode continues. You'll see here in just a second that we're pushing up against some pretty formative resistance that has held multiple times going back over a year, but nevertheless, we are in a buy mode right now. We look at the daily chart for support resistance on the E-minis, and you can see what I'm talking about there. This is a level of resistance that we have hit over and over again. This goes back past June of last year, and it has held as a level of resistance. Although you can see that, even though RSI is looking a little overstretched to the upside, it is looking like we are a little bit overbought here. You got buy signals on most of our technical indicators. We are above the 50 and 200-day moving average. We are above the point of control. We are above VWAP. So all of those things continue to obviously add to the bullish sentiment here. I think what's going to be interesting is this week with FOMC coming out and maybe the banking information a little bit here. We've got FRC being taken over by JP Morgan. We'll get a little bit more information on that here this morning, but it will be interesting to see what the market can do with this level up here. But so far, we've been in a very nice bullish trend for the last little bit. You can see that really kicking off right down here about the last week of April. Really, we started to push higher again. And once again, we're back up to these levels that we've hit and been rejected from over and over and over for over a year. So do we break through this time? Well, I think we'll find out maybe this week. And it would actually be nice to get a little bit of a substantive bullish move to the breakout, upside sort of move, or bearish move one way or the other. But it would be nice to move out of the chop zone that we've been in for such a long time, really constricting expected moves, potential moves, and thus the premium that we get as option sellers. It's been a little bit tough from that standpoint, but I'll give you some of the numbers that I am looking at here on the 2-hour chart as we start our trading this week. Again, it's a little bit easier to find support levels than it is to find resistance levels because it's been really over a year since we've been above these levels that we're currently at right now. So trying to find resistance levels up here to the upside, you got to go back quite a ways. And the further back you go, the less accurate they tend to be. But to the downside, if we're looking at support levels, to the downside, that's pretty straightforward for me today. 41.79 would be the first level. 41.70 is a level down below that. 41.55 is down below that. 41.45 down below that. And then the big one for me on the downside would be 41.30. That would be the really big demarcation point. If we could push below 41.30, I'm just taking a look at the futures right now, off just a tad here this morning. If we could push below 41.30, I think we could get some momentum to the downside. But that's a little bit off from where we're at right now. We're at 41.85 right now as I put this together. On the upside, again, as I said, it's a little bit more difficult to look at levels here, but I think the first big one is 41.95. And I do think that that's a big one. right there. That sort of just under 4,200 level has been, we've seen it over and over again. It's been a huge resistance area to the marketplace. So I know that we're sitting right there. We're at 41.85 right now. 41.95 doesn't seem like a big stretch to get to, but the market's got to get above that, break through 41.95, hold it, and continue to push. And that's a big task because it has been in the past a very, very big resistance area. But if it could, I think we get 42.07 as the next level above that, and then 42.88. Now, there's a big gap right there between 42.07 and 42.88. There's a big vacuum sort of in that range. And I think if we can break above that 42.07 level, hold it, build some support, there's some decent upside in this marketplace. But again, it's been a tough go for the market, at least over the last year, to try to break above that level. We look at the major indices that we trade on a weekly basis here, the SPYs, the Qs, the IWMs, and the diamonds. And again, with the exception of the IWMs, everything is solidly above its 200-day moving average. And it's really tough to make a bear case for anything that is still trading above its 200-day moving average. I do see a lot of resistance areas that keep getting hit here on all of these major indices. But nevertheless, they are above the 200-day moving average. They've been pretty strong at holding those levels. However, I've mentioned this multiple times in the trading room. Over the last week or so, we've got basically 5 stocks, and they're the big tech stocks that we all hear about and that we all know. It's the Microsofts. NVIDIA is actually in there as well. Apple is in there. Actually, Tesla is even in there as well. But there's about 5 large cap tech stocks that are really holding up the S&P 500. We'll look at year-to-date performance in the indices in just a second here, but 85% of this year's gain in the S&P 500 comes from 5 stocks. 5 stocks. And when they run out of gas, and every stock runs out of gas at some point, I think that you are going to see this start to manifest itself. And by manifest itself, what I mean is we shouldn't be pushing to a high and have this many stocks still trading below its 50-day moving average, this many stocks trading below its 200-day moving average. There's 5 stocks essentially holding up this marketplace. And if they were to falter, I think you see a lot of potential to the downside. We do look at year-to-date performance, and 22% for the Qs. Just absolutely astounding what the big techs have done. Those stocks, those big cap tech names have been what's holding up the marketplace. I don't think that continues. I mean, color me jaded, but I just don't think that we continue to see that kind of performance as the year drags on. S&P up a solid 9% right now, with the Dow and the IWMs basically flat, just a little bit to the upside. We, of course, have an investing program that has a goal of beating the S&P 500. We're not beating it, we're trouncing it. We're doing pretty well with that right now. We'll look at performance in just a second. Sector rotation. Not a whole lot jumped out at me last week with regards to money flow and what sectors money was coming out of versus what sectors money was coming into. We continue to see some pretty decent support in the real estate area. Of course, that is on a lot of people's mind. I think it is shifting a little bit more now to commercial real estate loan problems more than the single-family residential market. But nevertheless, seeing some pretty decent strength in real estate. And of course, real estate is the number one driver in the United States for GDP. It's the number one thing that contributes to our economy. So if real estate can hold itself together here a little bit after the interest rate rise and all of the things that has done to pricing in the real estate markets, that would obviously be a bullish thing to look for. Technology continues to just power higher, and I do think at some point we lose that. And I think this is the key right here, is this technology. When we lose that push in technology, I think we lose most everything in this marketplace. But it has to happen first. It hasn't happened. Heat map over the past week, pretty darn solid week, really pretty much across the board. We had a couple of the solar stocks that were a little weaker. Some of the healthcare area was a little bit weaker last week, and then Amazon had earnings, and that got hit. We do still continue to have a nice position in Amazon on that was somewhat of a neutral position. Then we benefited greatly from that earnings announcement. But generally across the board, pretty solid week, which would imply again that we've got sort of this bullish action taking place in the marketplace. We look at 2 weeks ago. That's 2 weeks ago versus last week, and again, pretty darn solid week across the board. The Qs just continue to scream higher. I do not think that continues. I don't think you're going to make 2% a week. I don't think you're going to make 98% a year in the NASDAQ this year. And so I do think that this is going to start to falter here. And when it does, I think it might pull down the other indices. IWM was the one sort of laggard for the week. Again, I think that sometimes the Russell, the small caps can be the canary in the coal mine. They can sort of give us a first glimpse of where weakness is starting. So we'll have to see how that plays out this week. Again, obviously, we'll get into news in just a second. We've got FOMC on Wednesday, and that could be a driver. One of the things that I think is interesting, even with the S&P up now to 4169, the gamma walls, the open interest areas, the points of control, however you want to look at it, are still down around this 4,000 level. They're still down here, and they are by and large more puts than calls. If you look at the option skew right now, it is crazy how much more premium you can get on the put side than the call side. What's the market maker implying when they do that? Well, obviously, what we're seeing here is that people are thinking there is more risk of a move down than there is a risk of a move up. Again, we'll have to see how that plays out. This hasn't been substantively different for several weeks now, and of course, the market's still continued to push higher. So we'll see how that plays out. Expected moves in the marketplace based on premiums and standard deviations still very, very low. Not as abysmally low as they were 2 weeks ago. Last week was a little bit better. This week is a little bit better. But, we're used to 140-point expected moves in the marketplace. And the commensurate premium that comes with that and our ability to really maneuver around a trade with that premium, our ability to do that is definitely crimped when we have these low types of moves. We have adapted, we have adjusted. We're using broken wing butterflies, we're using butterflies, we're using other approaches that give us more of an asymmetric edge so that if the trade works, we still make a decent amount of money on the day. But if it doesn't, it's easy to fix because there's a low capital at risk requirement with those trades. So expected moves moving in the right direction, but for an FOMC week, man, that's pretty low. That's pretty low. We look at the fear greed index, and again, it's a contrarian indicator. Basically, when everybody is greedy, we should be fearful. When everybody is fearful, we should be greedy. We're still up in that greed area. It's nothing insane, but definitely a lot more people greedy than fearful. And again, reversion trading, reverting back to a sort of rubber band approach of what gets stretched out eventually snaps back. I do think that I'm looking more for a downside move than an upside move here. We look at the news items for the week, and today we have ISM numbers coming out. Tomorrow we've got the Eurozone CPI numbers and U.S. factory orders. Wednesday, oil inventory numbers. That's a big one for us. We trade oil every single week in our trading room. And then FOMC. So that'll probably be the driver for Wednesday is FOMC. Thursday, we have jobless claims, nat gas inventory numbers, and the ECB rate decision coming out. And then on Friday, we have non-farm payroll numbers. So there are some potential catalysts this week, both for scalping and for potentially getting a breakout, one direction or the other here in the marketplace. Again, we'll just have to see how that plays out. We look at our updated performance Year to date and through last week, I can make some comments on some of the things that we're working on. We've had 8 on our 0DTE trades. We've had 89 days of trading opportunities. We've been able to do 148 trades. That's been probably the biggest win for us this year. Was for so long we had really elevated NDX, NASDAQ premium, and it allowed us to double dip. It allowed us to get in an SPX trade in the morning, book our profit, and still have time in the day to reallocate that capital to a second 0DTE. So this is the big thing for us this year. Obviously, we've done fairly well on our winners versus losers, but the quantity, the number of trades that we've been able to do has been the big thing. We do have 2 rolled positions, 2 0DTE rolled positions right now that we're continuing to work, one in SPX and one in the NDX. 4DTE SPYs, we had a great week again. Last week we were able to book those profits on those early. Once again, that's 2 weeks in a row that we've been able to take those off early. That's always nice to go into a Friday not having to worry about those. And we were able to book profits on both of those. So we're at 36 wins and 3 losses so far this year on the 4DTEs. The IWM Millionaire Maker trade, 18 total trading opportunities, 26 total trades. We have been a little bit more dynamic with that trade this year. That has, with a goal of boosting our income on that trade by 10 to 25, maybe even 30%. We're at the high end of that. We have been averaging about 30% more income on this trade than we did last year. So very, very excited. Obviously, there's a lot of year left to go, but very excited to see where we'll end up this year with our results on the IWM Millionaire Maker trade. It definitely does have the consistency and the income potential to make us millionaires with a very, very small amount of initial capital starting. Pairs trades, we did not book any profits on our pairs trades last week, although we're going to be working those pretty heavily this week. So we've got 2 that are still open. We're going to try to work those pretty heavily this week and potentially add 1 more. So pairs trades this week. If you like those trades, we'll be working those this week. Bear market strategies, still nothing there over the last couple of weeks. We will look for one of those. I've got a couple on my radar. We'll have to see if we can get those in this week. Stock market Millionaire Maker year to date. We're doing this trade now on 3 different underlines. ZN, which is the 10-year bond. ZN, 10-year bond. Netflix, and PayPal. And those have been absolutely solid winners for us. And we approach all 3 of those with the same strategy, but we implement it in different ways. So definitely from a diversification standpoint, recommend you look at all 3 of those if you're looking at that strategy. And, you know, with the IWM Millionaire Maker, we're looking at like 1.3% a week. That was our goal. It was 1%. Now we're getting about 1.3% a week. On the stock market stock Millionaire Maker, there we go, year to date results, what we are seeing is about 2.5% a week on the bonds, about 3% even on the PayPal, about 4.7% a week on the Netflix. And it's just absolutely been fantastic for us. We haven't had a single losing trade in that category this year. Our positive Delta DIA ladders, we were able to add 2 more of those this past week. And all of those ended up being winners for us. So far, so good on that. That's a trade that has been averaging about 9% a month for us so far. Scalping last week, really bad week to even try to be scalping. I tried to be directional rather than actual scalping on Tuesday, and that would have been amazing if I would have been right directionally, but I was not right directionally. $1,900 loss for me on Tuesday. Thursday, we got off to a good start, and I called it early because I didn't want to give that back. So not much success with scalping last week. Dragonflies, we have a BA trade that we'll be adding back here this week, so excited to get back into that. Theta Ferry, we only had one Theta Ferry trade last week because we were in it and we were rolling. It was a winner, ended up being a winner. 76 winners versus one loser. I've seen a lot of stuff on the internet about people who have sort of stolen our Theta Ferry idea. It does emanate with us. It is not proprietary to us, but we're the inventors of it. We're the ones that put it out there. And what you're seeing on the internet out there, what you're seeing on YouTube has been stolen from us. And you see a lot of people saying, that trade's not working for me. Well, maybe you might want to come on board with us and trade it as a group if you don't understand how to actually handle the trade. It's been a challenging trade over the last 3 weeks, but it's been a good trade. We just booked our profit from Sunday nights here this morning already. Already starting off the day with $100 in our pocket. So that number will go up. Gold ladder, fantastic week last week with our gold ladder. Just absolutely fantastic. This is 4 weeks in a row now that we're putting actual serious cash in our pocket from the gold ladder. It's been long suffering for most of this year. We've had to roll. But the last 4 weeks have been fantastic and the payoff is finally starting to show. This should be another good week for us with our gold ladder as we add our put spread back in. So fantastic week for us last week on our gold ladder. Overnight vampire trades, we had a winner this last go around. We'll have another one here coming up in a few weeks. Oil ladders, we had a great week last week. We needed it with the oil. We've been a little hit and miss here lately with our oil ladders. Of all of our ladder trades, oil has the highest potential rate of return. So it would probably go without saying that it also has the highest volatility. It's the tougher one to trade. But we had a really good week last week. That certainly helped us get back where we need to be P&L wise. And we're going to look to add one more oil ladder to our system this week, sometime after Wednesday's oil inventory numbers get released. In the money cover trades, we had a ton of those last week. We did, I think, 4 to 6 different in the money cover trades last week. They all ended up winners. This has been such a solid trade for us. And, you know, we've got people that are in the program that only focus on things like the IWM Millionaire Maker and the Stock Millionaire Maker. They don't need 40 different trades every week. There's a lot of people doing that just with the in the money cover trades. It does take a little bit of buying power to do the in the money trades. You know, some of them are a minimum of $10,000 to $15,000 a trade. So, you know, you do need to have some capital if you want to be properly diversified to do them. But the results speak for themselves. It's really been fantastic. Broken wing butterflies, we added one last week. We were able to make money on one broken wing butterfly last week. We'll keep looking for opportunities to do those going forward. Our short portfolio, I am about liquidated on the short portfolio. We have about booked all of our profits, just a couple little lingering positions there in the short portfolio, and then we'll redeploy that into something else. Flies, we haven't done any more flies yet this week. Our ATM program, our investing program, so stoked about this, just absolutely fantastic. We're up about 16% year to date, almost double what the market is doing. You can see the blue line, that's us, and the orange line, that's the S&P 500. And again, our goal with our passive investing program is dual fold. It's not just beat the market, it is do it at less risk, and we measure risk via volatility. So, you know, it's one thing to say, hey, you know, I'm beating the market up here, but my daily results look something like that. You know, that doesn't really meet the criteria for what we're looking for. We're actually looking for something that is a little bit smoother and over the year kind of just looks like that. And so far, so good. It is so challenging to beat a market that is up 8% and do it at less risk. Could we do it by taking more risk? Maybe, you know, we can make 10% in a day on a 0 DTE, but the risk, of course, is off the chart. So to take less risk, to have less volatility, and basically just be absolutely trouncing the market year to date. Obviously, there's a lot of years still left, but we're 3 years now into this. We've had bull markets, bear markets, and flat markets. This program works in any market environment. It's just been fantastic for us. If you want to come join us, you can. Go to tryzeroDTEforfree.com. Come trade live with us for 7 days. Talk to our members in the trading room and ask them whether or not they think this is the most amazing value-added trading room out there today. I think you'll be impressed with what you see. We have a 200%, 2 times your money back guarantee. If you go through the 4 hours of training, if you do a one-on-one strategy session with me, if you're doing your daily check-ins, and at the end of the first month of your subscription, you're like, I don't think this is the most amazing trading room. No questions asked, I'll give you 2 times your money back. So never had one of these come through yet. Never had a single person say, yeah, I think you were wrong. So I'd encourage you to come try it. Check it out. If you are interested in the investing program, if you're more of an investor, passive, risk-focused, you only want to spend 5 minutes a day managing your portfolio, you can go to tryastforfree.com. Again, our goal is better returns than the S&P 500 with less volatility. And if you do want to come scalp with us on Tuesdays and Thursdays, you can go to tryscalpingnow.com. We have access to prop fund money for you to trade. You can get access to 50 grand up to $250,000 of prop fund money to trade with if you can pass the evaluation. And it is a great training program. It is a great, I recommend everybody try it because you'll learn stuff as a trader. So that's our week in review. That's our week looking forward. Want to say thanks to all of you guys that are a part of our program. I do believe what Zig Ziglar says, that you can get everything in life that you want if you just help enough other people get what they want. I appreciate all of your guys' supports. I hope you have a great trading week. Let me know. Keep me informed on what you guys are trading, where you're finding the action in the marketplace. And good luck with FOMC on Wednesday. Take care, guys.